Happy new tax year, folks. Welcome to episode 41 of my investment journey series. The series I do on my YouTube channel where I go through my entire Trading 212 portfolio, look at my investments, look at how things are performing, what I've sold, what I've bought, dividends I've received, etc, etc. So yes, it's now a new tax year. My utilization so far is 0%. I've not put in any new money into this new 2021 limit, and I'm planning to do so maybe within the next couple of weeks, hopefully. So at the moment, it's still £0 and 0 pence. The goal, of course, is to max out this ISA for this tax year. It's going to be a big ask. I'm going to do the best I can. In last tax year, for 2020, I did get to 81% ISA utilization. So I'm really going to try and better that. So wish me luck, guys. And that sounds like a perfect time to tell you can subscribe, follow the journey, see if I can do it. I've now been doing these sort of videos for about a year on my YouTube channel. If you're new here, follow the journey and let's see how things can go from this point on. Just in case you didn't know, I did a video last week on my Trading 212 top video you can see here, Trading 212, my investment journey so far, 1 year later. It's basically me talking of my first year of investing as a complete beginner and what my thoughts are after 1 year of investing. So please check that out if you're interested. So with that out of the way, let's jump back to the Trading 212 portfolio. The value is £20,182.85. I've invested £17,624.92 and we're now sitting on a return of £2,557.93. So 14.51% return in the green. So this has been a pretty strong week. I'm happy with how a lot of my investments are now sitting. You can see a lot of green here. There's a few ones in red that have kind of been in red for a few weeks now, like the iShares Global Clean Energy, the iShares Physical Gold. We've got AMD right there at the top. Although it's crept up nicely and it's nearly back into the green, they were 2 free shares I received, so I'm not too bothered about those anyway. We've got that 1 free share there of Snapchat, which is still 33 pence in the red, and then Unilever, which is still in the red as well. But as you can see, the vast majority of my shares, of my holdings here, are in the green, which is brilliant news. This week, like I say, has been very strong. The S&P 500 in particular has reached a new all-time high, and this ETF just continues to amaze me. It's definitely, if I show you here, 3 monthly view, it's just like a rocket, and it's going up and up and up. And I have been investing into this one again a little bit this past week, increasing my position there ever so slightly. So yeah, it's been a good week. I'm happy with how a lot of these are looking. I've tried to adjust the portfolio allocation a little bit more. I've, like I say, added to the S&P 500 again slightly. I want to get that up a little higher. It's at that 19% right just now nearly, and I would like it to get maybe 25-30%. So I'm gradually building that one back up. The FTSE 100 ETF is 13.5%. I want to get up to the 15%, and the FTSE Emerging Markets is 11%. I would really like to up that as well to maybe 15%. So again, this is just going to take a bit of time. Once I start investing money into this new tax year, into the utilization for this year, I will be putting the money towards those holdings and just increasing those positions there. Now let me take you over to my dividends in the history section here, and let's just have a quick look to see what's been going on. So my most recent dividends here, we've got the iShares Core FTSE 100 ETF and the iShares Core S&P 500 ETF. So the FTSE 100, that paid a really healthy dividend of £21.34. Was absolutely chuffed with that. So I own 380 shares, or at least I did own 380 shares at this point. So I got a dividend there, £21.34. Chuffed with that. That's just been reinvested straight back into that ETF, and I'm happy with that. The S&P 500, another decent dividend here of £10.55. So that was for the 120 shares that I owned in the S&P 500. And just to be clear, I owned 120 shares in this ETF when the ex-dividend date happened. So that is a date that you must own the shares by to be eligible for the next dividend payment, if that makes sense. So yeah, I was chuffed with those dividends. I completely forgot they were coming, to be honest with you. So it was a really nice surprise when it popped up on my phone. Dividend paid, Trading 212. That's the sort of notifications I want to wake up to every single morning. Moving on to the 6th of April, We had the Vanguard FTSE Emerging Markets ETF that also paid a dividend, and that was a dividend of £3.19, and that was for my 39 shares that I held in that ETF on the most recent ex-dividend date. So yeah, not as high a dividend as the S&P 500 or the FTSE 100. I don't have as big a position in that ETF, and that ETF does not pay as much of a dividend as the other ETFs, so that explains for that. Now moving on here to the most recent one that I got, which was my Royal Dutch Shell, my RDSB. This was a really healthy dividend for sure, probably one of the best dividends I've received so far, of £17.10, and that was for my 143 shares I owned in Shell. So yeah, another one I was absolutely chuffed with, and that has also just been reinvested back into one of my investments. I don't think I reinvested that one back into Shell. That was possibly one that went back into the S&P 500. So we can see down here at the bottom right of the screen, total dividends, £198.09. That is from just over a year of investing. So I started investing, to those who don't know, 2nd of April 2020, and now today is the 10th of April 2021. So just over a year of investing, and nearly £200 in dividends have been received. So let's just have a quick rundown of my investments here in my Trading 212 account, and we will start from the bottom just to be different again. So the Vanguard FTSE Emerging Markets, ticker symbol VFEM. I'm now 11.47% return with this investment. Big fan of the FTSE Emerging Markets. I think I've said that in previous videos. I know it's higher risk than some of the other ETFs you can invest into, but because I still class myself as somebody who's young, even though I just turned 30, so some people might think I'm now turning on the side again old, I feel like I've got a lot of time left here in the market, in the stock investing game, in the stock world, so I'm happy to have this as a pretty sizable portion of my investment portfolio. The VanEck Vectors ETF, ticker symbol ESPO, big fan of this one. I've said this as well previous in many videos. I think esports is going to be huge over the next few years. Big fan of gaming and everything else involved with this ETF, so I'm definitely happy with the investment I've got here. Unilever, we'll skip by that. That was a free share that I received that I've just not got rid of yet. I'm going to wait till it goes green and then potentially sell and put the money elsewhere. Tilray, 2 free shares that I received that I've just not really done anything else with at the moment. Just kind of been hanging on to these. Probably wait until it goes green and then look to sell out of this one too. Starbucks, not too much else to say about Starbucks I've not said in previous videos. Ticker symbol SBUX. Everybody knows Starbucks. Most people love Starbucks. Yes, it's very pricey for what it is. It's just fancy coffee, really. I'm kind of helping my investment in a way when I buy a coffee from Starbucks. At least that's the logic I'm playing in my head. But regardless, happy to hold, happy to keep investing into. They do pay a dividend, and yeah, that's Starbucks. Royal Dutch Shell, you saw the dividend I recently received here, ticker symbol RDSB. Big fan of this. Definitely think it's going to be a strong recovery play. I have a pretty sizable investment in Shell, as you can see on the screen here. Also, I'm invested in the FTSE 100, and Shell is one of the biggest holdings in the FTSE 100. So yes, I'm possibly overexposed to Shell, but I'm willing to take that risk, and I'm increasing my positions elsewhere in the portfolio. McDonald's, I'm not going to say much else about McDonald's. I've said in previous videos, and yeah, it's McDonald's. Everybody knows who they are, the Golden Arches, etc. 3.5 shares, £17.68 return, 3.14% in the green. Again, going to continue to hold, continue to invest into at a slow amount. I'm not looking to put lots of money into McDonald's at the moment, but it's going to stay part of my portfolio for the time being. Legal & General, big fan of this one of my favourite UK stocks, ticker symbol LGEN. Ex-dividend date coming up soon, guys, so keep your eyes peeled. If you want to get in before the ex-dividend date, the date for that is the 15th of April. So today's the 10th of April, so you've still got time. It's obviously the weekend now. So yeah, Monday, Tuesday, you've still got time to buy in if you want to, if you're interested. I'm a big fan of Legal & General. My next dividend is going to be extremely healthy from them with the amount of shares that I've got here. Currently on a £300 return, near enough 26% in the green, 485 shares. So I'm expecting a dividend of around £35-ish, I think. I can't remember exactly. I did work out what it was going to be roughly. So yeah, when that comes in, that'll be great, and that'll just be reinvested. let compound interest and time in the market do its thing. iShares Physical Gold, I'm not going to talk too much about this, but it did look like it was trying to make a bit of a recovery earlier this week. I did see it going up for once instead of down like it has been recently. So yeah, maybe SGLN, ticker symbol, is making moves. So watch this space and see what happens. The INRG, the iShares Global Clean Energy ETF, big fan of this one, big fan of clean energy, definitely the future. It's how things are going. I think it makes sense to invest into this and to hold it. It's taken a dip recently. I've taken that as a buying opportunity, so I have been buying more shares in this ETF, as you can see on my screen here. Just kind of get my average price down ever so slightly, which is always a good thing if you can. And if you believe in something long term and you're happy to continue to invest into it, when it dips in price, it's a great time to do so if you've got the cash to buy a few more stocks. So why not? The S&P 500 ETF recently reached all-time high, as I think I said earlier. Big fan of this ETF, my biggest holding, always will be my biggest holding, I think. Yeah, ticker symbol IUSA, currently £594.85 return, 18.39% in the green, 500 top companies in the US. I'm invested in a little piece of each of them. So yeah, chuffed, definitely going to continue this, increase my position as I can. FTSE 100 ETF, 400 shares now with this, and the return is now £424.18, so 18.42% up with this investment. Again, ticker symbol ISF if you want to check it out. Big fan of this ETF also. I think there's still a lot of value in the FTSE 100, although I must admit, recently I have been thinking on selling out the FTSE 100 completely, taking the £424 profit that I've made here and just reinvesting that into the FTSE 250. So let me know what you guys think. If anybody watching this right just now is invested into the FTSE 250, let me know in the comments section. I just think it's got more growth potential. A lot of the stocks in there I like the sound of, I like the look of them. And also, because I'm already a big holder in Shell, like I said earlier, Shell's in the FTSE 100. If I invest in the FTSE 250, I'm kind of taking a bit more exposure away from Shell. I just think it's maybe a nice way of balancing things up. So that's just something I've been playing with on my mind. I've not actually committed to it yet, so we'll see what happens, watch this space. But yeah, I'd love to hear your input on that. I've got 9 free shares in General Electric, 24.35% in the green, looking good. I'm going to continue to hold and sell maybe when it gets a bit higher. Cineworld, I've increased my position here over the past few weeks, so I've now got 300 shares. Currently a return of £138, so 79.32% return with this investment. But I did start buying into it when it was at its lowest lows, so that explains why you're seeing that return on my screen here. And if you just take note there of my average price, 58 pence, and it's now 104 pence. So you can just see there how the percentages are working out. So coming up to the big boy here, Argo Blockchain. I've now got 900 shares in this. Ticker symbol is ARB. Big fan of Argo. I did want to have some sort of involvement in cryptocurrency. And personally for me, I think investing into a crypto miner is a smart play. I was happy to do this, so that is why I went with Argo. So Argo's taken up a big percentage of my portfolio now. It's roughly 10 or 11%, so kind of on par with my Shell investment, which is 10%, I think. So yeah, I'm kind of putting a lot of faith into this company, and it is definitely quite a risky place still, a lot of people would think. But I'm happy with my level of risk here, and I have been buying more shares recently. My average price is 149 pence, and they're now at 225 pence per share. And then finally here, my 2 free shares in AMD. Again, definitely really glad to receive these free shares. It's not a company I would have invested into myself, but I got the free shares. I wanted to hold them. I'm going to wait until they get into the green, which, to be honest, are very close. Only £1.87 in the red just now. So I'm thinking by next week, maybe this will be back in the green. And when it is, I'll probably sell out, put that money elsewhere, again, probably into one of my ETFs. And at least that then brings my total investments down. Because like I've said in some previous videos, I want to get down to maybe 15 investments. I like the idea of holding between 10 to 15 investments. I just think it's easier to keep track of things and to manage it. Personally, for me, I know that's not up everyone's street. Some people like having 25, 30 plus investments. Unfortunately, Trading 212 still has a freeze on new account registrations. Hopefully there'll be some news soon. Fingers crossed for next week. I know there's a lot of people out there, especially with the new tax year, wanting to sign up to Trading 212, get opened with an ISA, get investing. They're kind of looking for some sort of update, and this is not really much coming out at the moment. As soon as some news comes out, I'll be sure to put a video out. I'll let all you guys know. And if you want to sign up to Trading 212, feel free to use my link you can see on the screen here. It will be the top comment below. It will be in the description of this video. You don't have to use it, but if you do, and you sign up on this link and you join the waiting list like you have to just now, because they're not, like I say, allowing you to open an account at the moment. Once that account does get opened, you will receive a free share worth up to £100, and I will also receive a free share worth up to £100. So that's really it for this week, guys. I hope you liked that update. Let me know how things are looking for you with your portfolio, and leave some comments below, and I'll be sure to get back to you. I do try and reply to every single comment that I get, because after all, we're kind of building a whole community here. Nearing 1,000 subscribers, so it'll be brilliant once we can get over that number. Thanks again for watching, really do appreciate it, and I hope to see you all again in the next video.